Good morning, Jags. This is Fahad. Today is Wednesday, July 8th. Let's get started. I'm going to quickly touch upon a couple stocks of interest. Let's start off with Walmart. The news that came out yesterday, I had some time this morning to just reevaluate what is exactly the significance of this and how much are we looking at to the upside potentially. Now, Walmart, first of all, when you compare Walmart to the large other online e-commerce retailers, you always run into the scenario where you always get the sense Walmart is rather very, very cheap compared to everybody else, simply because it is still, for the large part, gets boxed in the thinking that it is basically a brick and mortar store. But the way this company is reinventing itself, and with the news out last night about launching a Amazon Prime style competitive service called Walmart Plus, the real question is how much does that service results in multiple expansion on the stock, considering how it trades previously in the historic valuation, and with that multiple expansion, how much higher can it carry the stock potentially? My thinking is that you're going to get about 3 to 4 times price to earnings multiple on that stock. Now, considering the company has about $5 roughly earnings per share power, that could be potentially, in my view, as much as $20 to the upside from the time that the company actually reported the news yesterday. So if you take the $120 price target, you add 20 to it, I think this stock would eventually be heading towards $140 per share. Now, it's not going to get there in a straight line, but I think it's going to be a series of higher highs and higher lows, and that's eventually where I think in the long term it's going to march towards. Couple things. This service that's going to be $98 per year or $12.95 per month, it's going to according to the Recode article, it's going to provide unlimited same day delivery. So literally, I could go to my Walmart app and I could order a single grocery item like milk, for example, and this will get delivered. And then the next day, I could go back and order something else, and it will be delivered. It's real time. Walmart is everywhere. Same day delivery, unlimited for both grocery items and most of the merchandise items. So that's a major game changer if you think about how competitive this actually makes compared to Amazon. There are 120,000 different items in a typical Walmart store. And more importantly, Walmart is also going to allow these Walmart Plus signups to have lower price or discounted price on the gasoline purchases if they go to any Walmart gas stations, as well as early access to product deals during holiday seasons. So, for example, when Thanksgiving and Christmas will be coming up, and some other perks. Another part of this that did not get enough mention is Walmart is announcing a partnership with Shopify. Actually, this partnership was announced a while back. This will add incremental 1,200 third-party sellers to Walmart.com platform over the near term. And while I believe that the number could grow significantly in the future because Shopify has been working currently with 1 million third-party sellers, but so that's another piece of the element that is not fully baked into consensus. We only 1,200 of the 1 million third-party sellers are going to start off selling their products through Walmart.com website, and this number could go into several hundreds of thousands down the road. That gives a much larger assortment of merchandise for Walmart to sell while pushing this Walmart Plus Prime style service out. So keep an eye on this stock, although that this thing ripped higher yesterday by about 7% and closed on a very, very high volume. Look at the volume yesterday. It was the highest volume we have seen in more than a year. Actually, if you go to multiple years, we have not seen a candle and volume like this. But I think any pullback in this stock from this point on is going to remain very shallow, and we're going to see this continue to march higher over time. Second thing I want to quickly discuss is Chinese stocks. If you look at Alibaba in pre-market, it is gapping higher sharply yet again. After closing at about 237, it's going to open at 245. So Alibaba is going to have another powerful rally, but it's not just that. If you look at JD.com, that's up about 2.5%. PDD, that's up about also 2%. And if you just go down the list to any of the Chinese stocks, IQ, that's gapping higher by about 3%. NetEase, that's one of my favorite stocks, Chinese stocks, that's going to open $5. So the entire space is hot once again. And if you look at today's first read, you can see that of all the equity markets in the overnight price action, everything was pretty much down except China. Once again, Hang Seng and China continue to push higher. After a 5.7% rally on Monday, Shanghai was up a little bit, about 0.5% on Tuesday, and then on Wednesday it was powering higher another 1.7%. So over the course of 3 consecutive days, Shanghai market just this week alone is now up more than 7% in a single week. And that's clearly putting a big amount of bids under the entire market. Now, one of the main reasons why Alibaba is higher, which is also covered in the first read, is this news about fintech arm Ant Group, which is planning now a Hong Kong float worth more than $200 billion, matching companies' expectations for its valuation at the end of last year. So that's clearly helping the news in case of Alibaba. But make no mistake, as I mentioned this also in Telegram, with a chart, that Shanghai market is breaking out after a prolonged 4-year-long slump. And then the last time when Shanghai market broke out like this back in 2015, the market rallied total from the bottom to the top. Shanghai rallied by more than 150% over the course of 5 quarters. And then before that, you have to go all the way back to 2007 when Shanghai market broke out like this. It went up 400% over the course of 6 quarters. And so if we're on a similar path of magnitude, FXI, ASHR, all these ETFs for the for the Chinese market will basically continue to push higher. Now, from a pure technical trade standpoint, NetEase is where my eyes are right now, because first of all, not only this has been a very steady, strong chart of higher highs and higher lows. I presented the bull case and I've done podcasts in this one multiple times already. I mean, for last 6 months or 7 months, we have been endorsing a bull case in this one all the way since really November when I started to talk about this. Expect this to make a quick run towards $465 to $470 per share, because that story that came out from 2 weeks ago, which I discussed when the company had did the Hong Kong IPO listing, and it was significantly oversubscribed by 360 times than expected. I think that story now makes far more sense, simply for the fact when now the entire market is participating in both Hong Kong and Shanghai. So while the chart is already very strong and it's going to gap higher, it's going to open around 450, but I think in short term this thing goes to about 470, and then maybe it will go into another bull flag consolidation in short term. It's a very powerful fundamental, technical, and a little bit option activity as well. Very powerful story, just simply does not get enough attention. Alibaba will also naturally be a big one today because of that Ant Financial news. So that's all I have from today. Chronicle.
Hey Fahad, 2 pieces of news which caught my attention overnight. First, United Airlines provided some guidance expecting July capacity to be down 75% year over year and August to be down 65%. That follows capacity being down 88% for June. More importantly, the company is forecasting capacity to be around the level of August for the rest of the year, meaning it's going to flatline from August. Also, yesterday, in a separate announcement, the company warned it is looking to lay off and furlough tens of thousands of workers. So putting both together, that doesn't bode well for Q4 numbers. The other piece of news is related to Interactive Brokers. The company has announced the registration of a new entity in Singapore and the opening of a new office there. And this caught my attention because as an Interactive Brokers client myself, I've long held the belief that this company is a lot better positioned to navigate the zero commissions environment than other competitors like E-Trade and Charles Schwab. And Interactive Brokers' international presence is a major reason why. It's easy to forget that zero commission policy doesn't apply outside of America. Like here in Asia where I live, I'm still paying Interactive $8 commission to trade options and $3 to trade stocks. It's probably not much different in Europe. So back when all these US brokerages began their zero commission war, my first thought was that Interactive will at some point start focusing on expanding its international exposure. Back in 2017, 27% of their accounts were from Asia, and today that number is now up to 37%. Similarly, accounts from Europe have been rising too, albeit at a slightly lower pace, no doubt helped by recent tightening of regulations around leverage and introducing brokers over there, which killed off a lot of the smaller competition. This is not something that sell-side notes have really talked a bit in detail about. It's almost like they're just lumping Interactive with all the other purely North American based brokers. Frankly speaking, Interactive is the only viable broker in many parts of Asia if we want easy access to a wide variety of US stocks and options. So if Interactive wants to monopolize this whole region, it's really theirs for the taking, as they already have a strong presence in Hong Kong, India, and to an extent, Japan. But I think Singapore and Southeast Asia does bring a lot of opportunities for growth. This region as a whole has been getting wealthier and more developed over time. But one thing a lot of people still don't have access to is US markets, which is a pity because with a lot of shortcomings in local pension systems in this region, as well as corruption scandals, this has resulted in growing predisposition among adults to insource and self-manage their own savings and investments, perhaps more so than people in the Western developed world. So I think this represents an untapped opportunity.
This is fantastic. I love this idea. First of all, technically speaking, so 3 points over here, real quick, to add to your bull case. First of all, technically, anytime, as I've said many times, when something is coming up to resistance on rising volume, nonstop rising volume, it's basically a clear signal to me that it's eventually going to break out. And I think we're going to see that. Very heavy volume, and it's coming up to this resistance. The second point about this could actually be major beneficiary of the breakout that we are seeing in Shanghai and Hong Kong that we just discussed, with given its presence in Hong Kong. Now, as far as the commissions are concerned, a quick story that way back in 2016, I went to Belgium and Netherlands where I made presentation to a lot of prospective clients, and then we ended up getting a lot of those clients. These are European clients that are still with us. I think 60 plus, some of them are still with us in Jaguar Analytics, and they all use in Belgium and Netherlands interactive brokers to trade the markets. And what this company does is basically it licenses its technology to other regional brokers in other countries. So basically it's just like any US trading platform, but by licensing the technology, they allow other companies to sell it as their platform with their names attached to it and all that stuff. They simply provide the execution as well as the custodian of funds and all of that, basically the back office work. And those European clients that we have, I think they pay somewhere about $2.75 per option contract, versus in the US we pay somewhere between 50 cents to 75 cents. I don't know what it is for trading stocks. So this company with its international presence literally prints money. And it's the only company that actually that does that, because if you are actually, let's say, in India and you even try to open an account through Ameritrade or Schwab, it's not that easy. It's a very cumbersome process, and I don't think most cases they even allow that. Very interesting pick there, especially when Asian markets are rising as sharply as they are. One to watch going forward. Jay.
Morning, Fahad. So I was actually debating on what video game publisher to talk about today, and I'm going to talk about Take-Two Interactive, TTWO. Now I should say that I'll probably talk a little bit more about electronic arts. I'll probably save that for maybe a weekend research topic and then cover that maybe next week. But switching back to Take-Two, reason why I wanted to bring this up is if you look at Jaguar scan, there is some bullish option activity, some small buyers that were in the August 145 calls, and then the September 135 calls. Those remain in open interest. And from a fundamental point of view, let me quickly just share this chart. So BMO Capital was out last Thursday with a note highlighting that according to NPD Group, physical unit sales of their Grand Theft Auto franchise has more than doubled year over year in both April and May. Obviously, this is because of the stay-at-home mandates and whatnot. And then another piece of information was that in the month of May, the Epic Games Store, they offered free copies of Grand Theft Auto 5 for a 1 week period. And so this obviously drove, increased traffic and whatnot.
This is ridiculous. I mean, wow.
Right. And one of the things that I liked that BMO talked about was that the PC player count increased 245% from April to May. Now, you may think, well, a lot of this may be because of the promotion that I mentioned. Well, according to Super Data, that was only partially the case. According to them, and they don't really give the number breakdown, but they said that revenue more than doubled. And obviously with Grand Theft Auto 5, you have your downloadable content, you have your customization, the monetization opportunity that we all know about with video games. So that should present a great opportunity come next earnings.
Yeah, when I see a read through or mid-quarter channel checks basically of this magnitude, it just tells me the company is just going to simply blow the estimates out of water. And when you consider that back in May when they reported earnings, from that point, they may have already talked about some of this trend at the time already in the earnings call because they definitely had the April data in front of them. But considering that May further accelerated from that point on, and the stock is practically still flat from the last time when they reported earnings, I think there's reason to believe that this thing is going to blow estimates out of water again, and it's going to continue to move higher. What about their, sorry to cut you off, what about their product line though? That's one of the things about these publishers, that there's so much depend on what's in the pipeline for the new launches. Any color on that?
Well, one of the next things I was going to talk about is last month, CNBC reported that AT&T was looking to sell their Warner Brothers interactive gaming unit. Now, Take-Two, EA, Activision, and even Microsoft, they've been possible candidates to buy those out. Now, Oppenheimer was out last month saying that Take-Two would gain the most scale from a purchase, and they would go on to talk about, as far as a portfolio, their Warner's Lego franchise could open opportunities for Take-Two to address a younger audience. Meanwhile, you'd have their Batman and Mortal Kombat franchise. Those titles could be released more often during the year, because right now all you really have is your NBA 2K franchise. So just giving it more fresh content essentially, because then when you look at Rockstar's Grand Theft Auto and even Red Dead Redemption, I mean, Grand Theft Auto 5 came out in 2013, and I mean, it's still giving you great numbers, but yeah, I mean, if they could land Warner Brothers, that could give them
Huge leg
a
up.
little bit more in the portfolio.
Yeah, good stuff, great stuff. Okay, well, I'm going to be adding this to my watch list after this discussion just to make a play, see how it goes from here. Fantastic. Avo.
All right, short and sweet. Back June 23rd morning podcast, Fahad, you talked about ATRC, which Jay had written about quite a while back. And At the time you mentioned that we haven't seen much options activity. Well, there was some yesterday. There was a bull risk reversal lot for August, a small amount, 300 contract lot amounting to about $23,000, which I found to be a little interesting. There's not much since the last update or the last time you talked about it on that June 23rd. However, the week later, June 29th, Canaccord had I believe a bullish note out that Jay had tweeted out or posted within recently. But this is a little bit more towards late 2020, what Canaccord talks about. So I think this trader is specifically targeting the earnings, which are July 28th.
Yeah,
And
so they sold the 300 of the August 40
Mhm.
puts to finance the August 45.50 call spread. I have to check the price point, but it was likely done for as low or pretty much free.
There was
aside
a
from
little net cost to it. It was 22,000, I think, overall.
And if you look at this chart, this trader is basically willing to get long the stock on a major support if it continues to come down, which is right at $40 per share. So there's a major VOP support that comes in. So it makes sense to sell puts there to be long the stock going into earnings. If you have conviction, it's been a good fundamental all around this company, and but technically it turned me off when I saw this candle yesterday. And so I said to myself, this needs to complete the course of its corrective phase, which means it does need to come down to $40, settle there, form a base, and then we could have a potential entry again with a tight stop. So I think it's going to complete that course. Also, this company has been trading rather much more aligned with overall weakness in the Russell 2000 index lately, not previously, but lately so. And Russell is just not acting right. I don't know if you guys have been noted, Russell has been just way too weak compared to the rest of the market. Today, again, I'm looking at pre-market session. The Russell is down by 0.1%, but Nasdaq is powering higher by 0.3%. So we're going to see the same kind of mix that we saw yesterday as well. So I'll keep an eye on this one. We have the
definitely worth
fundamentals.
keeping an eye, especially with like 3 weeks to go to earnings,
Yeah.
which, as you said, I mean, it could very well come down and form a base or not. Who knows? But the point is that it's 3 weeks from now, and this was an interesting bull risk reversal, which is typically higher conviction than just going long.
And that's how typically it happens for me too in terms of entries, where once I have a strong fundamental view, I just wait until technicals line up before I advise clients to go in. So this one I'll be watching around $40 per share. Great stuff, guys. Thank you very much for joining. We'll see you tomorrow.